Welcome to McPlum, simple solutions served daily.
In this video, I will explain how to make a ledger balance. First, gather all your financial records, including receipts, invoices, and bank statements. Next, identify each transaction as either a debit or a credit. This initial step is crucial for accurate bookkeeping and ensures no financial activity is overlooked. We'll then move on to systematically recording these entries. Now, let's focus on recording. Debits represent money going out or an increase in assets, and they are always placed on the left side of your T account. Credits, on the other hand, represent money coming in or a decrease in assets, and they go on the right. Be sure to include the date and a brief description for each entry to maintain clarity and traceability. Once all transactions are recorded, it's time to calculate your balances. Add up all the debit entries in each account to get a total debit amount. Then, do the same for all the credit entries to find the total credit amount. The difference between these two sums gives you the account's ending balance, which is essential for financial reporting. Finally, transfer each account's ending balance to a trial balance sheet. This document lists all accounts and their balances. The critical step here is to ensure that the total of all debit balances perfectly matches the total of all credit balances. If they don't, you'll need to review your entries for errors. Remember to check the description for a link to the Owala water bottle and other great deals. A balanced ledger provides a clear financial snapshot.
Thanks for watching. Stay juicy and subscribe.